So I really just want to say welcome to everyone, wherever you may be joining us from, welcome. And you can appreciate, this is a no sanitizer zone, no mask zone, so feel free to participate in this week's webinar. We know that there are many places that you could be, so we're happy that you chose to take the time to spend a few minutes here with us. A few rules quickly for the webinar. Keep your mic on mute whenever you're not speaking. Post your questions at any time in the chat box. Listen to the person who is speaking. Raise your hand if you have a question, and you can find that in the participant tab right there. Be respectful also in your feedback, and the references for this entire series will either come from the Bible, from the Jamaican legislation, and from the book Perpetual Wealth. We do expect that you will learn as much as you can and laugh as much as possible. To let you know though, this webinar presentation is streamed live to Facebook, and it's recorded and posted on YouTube. So also want to welcome those who are joining us on Facebook at this time. On YouTube, you can access the webinar afterwards by searching for Building Generational Wealth. It's about the 4th, you will find it there. So while on YouTube, you can post your comments, you can like it, you can share it with your family. And just so you know, we want to keep you hydrated, so I hope you've been drinking your water, eating lots of fruits and vegetables to maintain a healthy mind and body, because it is a requirement for generational wealth. Remember, the first word in wealth is we. So let's pursue generational wealth together, and understanding the ways in which your payslip contributes to your personal and generational wealth. It is the topic for today's webinar, and we'll be focusing primarily on the Jamaican payslip. So wherever you are, you will find that the laws and the legislation that applies to your income will apply to you, but you can use this as perhaps a guide. Okay. I would like the team to introduce themselves, and I am your host. My name is Lynette, and I am a FSC licensed sales representative. I'm a financial advisor. And the rest of my team are Miss Sandra Passmore-Rowe.
I'm Sandra Passmore-Rowe. Sorry about that. Hi, everybody. Good evening. Sandra Passmore-Rowe. I'm the partner and administrator for Milestones and Lifestyle Planning. Thank you for coming back, those who were here last week, and welcome to those who are joining. I hope you enjoyed.
Thank you. And my name is Magdalena Cooper de News. I just have a wonderful time collaborating with Lynette, Sandra, and Mark on this presentation and just sharing. It's just so important to share, especially as you get older like myself. And I'm also an FSC Life Insurance Sales Representative, financial advisor, but I specialize in retirement, financial, and lifestyle planning. Welcome, everybody.
All right, so wonderful, wonderful. Good afternoon, ladies and gentlemen. It is indeed my plum-pleasing pleasure to introduce myself as well. It's Mark with a C, Blake. I am also a financial services commission licensed life insurance sales representative, financial advisor for over 10 years, you know, just being a servant leader and helping people with a wealth of information as it relates to creating generational wealth. Thank you so much for being on the webinar. Hand it back over to you, Lynette.
All right. Thank you so much, ladies and gentlemen, for introducing yourselves. And this is your panel of experts for today. But I firstly want to say how much we thank you to everyone who submitted so many kind words and encouragement and gave us such positive feedback. You also gave us information as to how and guidance as to how we can make this better. And we want to say a very big thank you again for such generous feedback. We only can hope that we have done your feedback some justice. All right. So if you're here for the first time, or if you're back for a second time, did you join this webinar because you are interested in budgeting of your income? Are you now using a structured approach to budgeting? And if you weren't here last week and would like to get that information, you can drop me a line afterwards. All right. Are you now ready for today's topic, understanding your Jamaican payslip? And definitely, I know I'm always here for this one because this pandemic era has forced us to face the issue of wealth and money right dead on in the center. So maybe it has forced you and your spouse or other family members to talk about budgeting and other money matters and to know, commit to a budget. Whatever reason you are here, we are glad. But it should be done that this webinar is done on the principle of love. It is done on the principle of love for God, first and foremost, love for yourself, and love for others. It's also done on your desire to plan for your own personal wealth, to enjoy that wealth, to manage it, and to be a good steward of an inheritance, and to preserve that for succeeding generations. That is building personal and generational wealth, ladies and gentlemen. Perhaps you are now in receipt of a financial inheritance. You should be aware that there are some responsibilities to this. You are now the steward of this inheritance, and it is to be managed for your enjoyment and to stay employed. An inheritance is a foundation for establishing generational values and financial wealth, so manage it well. If you are single or married and have children, ensure that you've established a personal and generational wealth building plan. That's very important. And if you are single and planning on marriage, consider getting a prenuptial agreement in place. So remember, managing an inheritance and building your personal wealth is for your enjoyment, but to create a generational wealth plan. I know a lot of these things might seem so disjointed in our reality, but if we allow love, forgiveness, and reconciliation to become our primary guiding living forces, then that will be the foundation in which we can continue to build on these principles of financial wealth. So we did have a bit of homework last week. I know you may have thought I forgot about that. How many of you did it? You can just put your hand up or say in the chat, I did. I'll give you 1 second to do that. Did anybody do it, Sandra?
So far, nobody has responded to say they have.
Oh, so maybe you are a bit shy. Is there any one person who could share with us how they felt about doing this exercise? Well, this one is about the mission and the vision statement for your family and your generational wealth goal. Did anyone do that one?
I don't know if Dr. Venice is around, but she had sent me a note to say that she was doing the homework. So I don't know if she wants to reply or if she wants to make a comment. Dr.
No, I don't want to be seen on it.
Oh.
Eh? They don't see you.
Is that Dr. Venice? All right, perhaps you want to keep it. It's your family business. That's okay too. But we do hope that you did get an opportunity to do this. Is there someone here who's married and you did this exercise with your spouse? Could you share with us how the homework exercise enhanced your relationship? Mark, did you do this exercise at any point in time?
Hey, Lynette, what was that? Repeat.
Did you do any bit of the homework?
I actually did, you know. I am one of those students who do the homework.
Okay.
I got straight A. I got straight A's in finance.
Okay.
All right. Do you want to share a little bit, especially about how this exercise enhanced your relationship with your spouse?
Well, you know what I can tell you, Lynette? I have always found that, and I learned this also from my mentor, Magdalena Cooper the News. She told me once that, everything really stems from the family. And if you have a disjointed home with your budget, you're going to have a disjointed home, not just in your personal life, but also collectively. So in like a macroeconomic sense, the government themselves would be off because, of course, we make up the government. So if you can't handle your own finances in home, then you'll find that you may not be able to handle outside finances as well. But in particular with my wife, it brought us really close together. It brought us close together because we made, we used to have date night on Fridays, and we turned date night into budget night, right? Where we had to make sure that at least for 15 minutes, not only are we going over our spending and stuff, but we're going over our goals as well. So every Friday we would be reminded of our goals, and together we were bonding much more, right? We were disjointed when it came on to finance because she's spending her own, I'm spending my own, but together, like Magdalena taught us, 1 and 1 is not 2, right? 1 and 1 is 1. So we have a joint finances at home. And so I learned that having that disciplined attack to budgeting together brought us together maritally in so many other ways. Of course, I'm not going to talk about after the budget, but during the budget, it used to cause a lot of contention before. There was a lot of contention because, this hand didn't know what the right hand was doing. My mom always said the left hand don't have to know what the right hand is doing. But no, we have to be joined together. So she needs to know what I am doing, and I need to know what she's doing, and we need to be on the same page where our budget is concerned. And so when we started to do that, I recognized that having that budget talk, there wasn't that much contention anymore because we were in unison. We were together. We were equally yoked where that is concerned. So I had fun doing the budget guy with my spouse, and we gradually started to look forward to it, and we watched our money grow together. We'd have little challenges for each other, and we just made it fun.
Awesome. Thank you so much there, Mark, for sharing. Because, in a study done, they cited financial problems and the lack of talking about money as, some of the demise to some marriages. All right, so how many of you have started to enter your spending details in the spreadsheet?
Hello? Hello, Lynette?
Yes.
Are you hearing me?
Yes, I'm hearing you.
Okay. I was wondering why Mark looked so happy recently, and now I know why.
Okay, bless you. I have started to actually put in some spending details in the spreadsheet, but I want to hear from those of us who were here last week. Mrs. Cunningham, have you done this exercise? Ms. Janice Cunningham? Okay, Ms. Cunningham isn't there?
No.
Okay. All right, so could one person share with us how they felt about doing this exercise? I will share then, since I know I did it. Because for one thing, I thought that putting 50% of my income into spending, my expenses are so much more than the 50%. That's what I thought. And then when I started doing the budget exercise, I realized that no, it wasn't actually. When I was finished, I actually had a little surplus for my spending, and so I thank God for that. So after I did my tithe and offering and everything else, I still had a surplus. Isn't that a blessing?
Yes,
absolutely.
Good job.
Yeah, that's great.
I'd just like to add to that real quick, Lynette. You know, just to add to that discussion, I found out that one of the key things to do in life is just to make sure you're taking care of you're practicing daily small disciplines. And I go back to that. And it serves us very good for the budget guide, because if you neglect certain easy things to do, the things that are easy to do are also the things that are easy not to do.
Correct.
And so if you, let's say if you don't brush your teeth today, right? It's not going to bother you that much, right? Let's say you don't do it tomorrow. It may not bother you that much. But if you do that repetitive neglecting of brushing your teeth for a long period of time, you might find that you may have no more teeth left down the road, right? And it's the same with budgeting. If you don't do it every single day, just a little bit, every day, you put away that receipt, and you just do those daily disciplines, you're going to find that over time, right, you're going to wonder, where did all this money come from? Well, it came from you doing those daily disciplines and not neglecting and making minor errors in judgment.
True.
And very key.
What I realized as well is that other than getting that steady income, if I received any other income, I would treat it the same way as I would my monthly income. So if I got an additional, you know, if I got a gift from someone, I would say yes, I would split it down the line so that more of it, you know, I could do more with it rather than just using it to do, you know, one thing.
Absolutely.
So has anyone shared with their children or grandchildren the principles from the YouTube video that we're talking about here, how the Jews teach their children money allocation? I understand that Mr. Lenworth McKinley has done that. Could you care to share? Mr. McKinley?
Like he's not on as yet. Is he on?
Okay, did anyone happen to share this video or talk to their children about it? Okay. Remember, it is an interactive webinar.
I think our audience are shy.
Carrie Ann Baker, are you online?
You know, before Carrie Ann Baker speaks, let me just chime in again. And this is also something that my mentor Magdalena and I used to speak about often. We tend not to speak about finances in our culture openly.
Yes.
We tend to not speak of it openly, and that's for many, many different reasons. But I can tell you this, when I was growing up, you would never hear my mother or my father speak about the bills or speak about how to open up this or how to open up that as an account. You'd never hear them say certain things about money or have that type of budget conversation. And that's for so many reasons. Sure, I'm sure Magdalena may touch on some of them. But I'm seeing the same thing now, even in our culture today. We're still hesitant. We talk about everything else, but when it comes on to wealth and estate planning and investments and things of that nature, we tend not to really share a lot about that stuff. Not sure if you found that.
Yes, I have. And I believe, you know, you've just hit the nail right there, Mark. And maybe we'll have to put away with our formal program this evening, because the reason why we're having this conversation is to re-educate ourselves, and is to open it up, to let you know, or to let persons know that it is okay to have this conversation. It is okay to let other people know and talk about money freely. Money is not our enemy. Wealth is not our enemy at all. You know, so if we have a more open conversation about it, we might find that we are more responsible. We're raising more responsible children. And if we have an inheritance for someone, that means we are raising them with some amount of financial maturity. You see where I'm going?
Yes, absolutely.
Yes. So, Miss Baker.
Yes, ma'am.
How are you?
I'm doing well, thank you.
Thank you so much for joining us. Did you do any of the homework last week?
Well, Actually, I did both. I did not have access to the spreadsheets, so I created one for myself. I always tell folks that if I'd learned finance when I was in my teens, I'd have been a millionaire at age 20.
Yes.
And so what I found actually is that I've always approached money with kind of closed eyes.
Mhm.
I think I share this with you because I don't have kids. I don't think I need to generate wealth. However, I do recognize, especially after last week, that I should be a little more fiscally responsible, even if it's for myself, for my retirement, even though we didn't expound on that quite a bit. But I think Mrs. Cooper, I think, had mentioned just briefly something about that. However, I did take the opportunity to also speak with my niece about wealth. And one of the things I reminded her was that number one, it's more expensive to be poor. And after you do the math, you recognize that it is way, way more expensive to be poor. To sacrifice 1 month to get your funds together before you spend usually goes a very long way into setting yourself up for more fiscal responsibility. So I did have a little exercise with my niece.
Thank you so much for sharing. That's so powerful. Thank you.
Thank
And I
you.
think that's what we all think, you know, if we had this knowledge when we were younger, we would be in a much further place at this time. I see Miss Beverly Ellis has raised her hand.
Hi, good evening, everyone. I I agree that if we had the information when we were growing up, we a lot of us would have had much more wealth now. But I have learned from not having my parents have those financial discussions with me. I have ensured that I have them with my son. So my
Very
son
good.
just, he's out of university 2 years now. He started working permanently, but from the time he started to work, he came and he sat with me and he said, he didn't sit with his father, he sat with me and he said, Mommy, I need you to help me budget. And I sat with him and, he told me what the salary was. And I sat with him and I explained the importance of saving, a certain percentage of your salary. I I had a Sagicor agent. Notice I said Sagicor. Because I have insurance with Sagicor. So I had my Sagicor agent call him because I explained to him the importance of starting an annuity from early.
Oh,
And then I also had, because I don't believe in placing all your eggs in one basket, I also had my guardian life agent meet with him and sit down and, take out critical illness, etc. So I am teaching him what I did not learn from my parents.
very good. Very good. Excellent. Thank you so much for sharing.
So can I say something there? Beverly
Yes.
is calling in from Trinidad.
Ah,
Yes, and I met her many years ago, so it's really, really good to have her on the program.
all right. Very good. Thank you so much.
So she'll be using Trinidad principles, and that's why she spoke about an annuity. In,
Yes.
in Trinidad, they tend to buy annuities from very early on, unlike the practice we have in Jamaica.
Jamaica. Okay. I realize that. All right. Thank you so much for sharing. So by now, everyone should be aware. This dog in my back. Everyone should at least be aware of their generation profile, and you can always check that at careerplanner.com, and you can see your generational profile there. All right, so this week, understanding the payslip. Of course, it's from a Jamaican perspective because this is where we live, it's our locale. And you can also apply similar principles as the laws permit in your country. So understanding your payslip and how it is a source for personal and generational wealth is the fundamental principle that we're going to be talking about today. And of course, we're going to be talking, well, a review of the budget guide very, very briefly. We're going to be talking about payslip terms and principles. And of course, there's a little bit of homework. So if you didn't yet, you will review your January to April payslips and enter the details in your spreadsheet and how to link your payslip to it. Even if you are self-employed, you can make your own payslip and see how it works into this worksheet. All right, so now I am going to turn over to Mark Blake and Magdalena Cooper, the news, to take us through that part of the presentation.
Okay, thank you, Lynette. Thank you, everybody, for being here. I am really looking forward to sharing this presentation with everybody. I think it's a very important part because I don't know if you all would agree, but many of us never really took our payslip to heart as we ought to have done. I have literally seen people who have actually taken their payslip, crunch it up and throw it in the dustbin. I hope none of you do that because that's not what a payslip is supposed to do at all. I don't know if everybody's seeing my slide well. Current slide. Is everybody seeing the slide? Lynette, are you seeing my slide?
Yes, we are. Yes, we are.
So we're going to be talking about understanding a Jamaican payslip, and as I said before, and as Lynette also said, we are going to be using the Jamaican law and the legislation and other aspects of the legislation for you to understand what it's all about. And please take the principles with you because the principles are really global. They're not just Jamaican, they are global. So what I'm going to do first of all is ask Mark to go through the payslip, which connects with the budget guide he did last week. Over to you, Mark.
All right. So thank you so much, Magda. I'm going to just go ahead and share my screen, which has the very same information on it. All right, so thank you again, Magda, for giving me this opportunity to share on the budget guide. So we would have spoken last week about this budget guide, which I want to find out from the caller or the attendee who is on the line, regarding not having received the budget guide. I want to make sure that each and every person gets the opportunity to get this guide. So we went through the budget guide, which I created along with Magdalena and another teammate of ours, Leighton Morgan. Together we sat down and we went through what are the necessary things that are important. And of course, Magdalena Cooper shared with us the principles of the 5 jars. And that was very critical in us putting this budget guide together, which also took into consideration the Jamaican laws, right, as it relates to NIS, NHT, and different other contributions that you may make to your superannuation fund or your approved retirement schemes. So we decided, we wanted to put this together so that each and every person had the opportunity to allocate each and every single dollar, right? So they end up having a zero-based budget. And so that's what we did. And so last week we went over it where 10% goes to tithing, 10% goes to offering, 10% goes towards savings, and the savings are all broken down here in different allocated in different categories. We had 20% towards investments, right? And we also had your personal spending, which took into consideration your education tax, income tax, groceries and things of that nature. Your utilities, your motor vehicle expenses, accounting services, and any other ordinary expenses. And at the end of it all, you would actually have a surplus or you'd have a deficit. All right. And so by plugging in these numbers, you are able to now understand if you're allocating your funds accordingly. And I want to really stop here to say this is part one. This is part two. Now, this is the part two of the budget guide which we shared and on the last seminar, webinar. The last conversation we had on budgeting, we looked at allocating everything, but what we did not look at is your payslip. And like Magda just said, it is so important for us to have our payslips and understand them, right? I can tell you this, I did not understand my payslip for a very long time, okay? And for those of you who are in a commissionable type of business, you will actually have a lot more problems knowing where your money is coming from because you have so many different sources. But ultimately, your gross pay and remuneration will be up here at the top, and you start off there at, let's say, $100,000, right? Okay, good. And with that being said, we now can understand the budget guide dealt with the 5 jars, right? Which helped us to split our money up. And let me also stop to say here that there are 3 key things to do with money. If you're not taking notes already, I suggest that you grab a pen, pencil, notepad, and of course, note takers are money makers, right? The dullest pencil is better than the sharpest mind. There are 3 things to do with money. You can accumulate money, you have to know how to multiply money, and of course, passing money on for the next generation with proper estate planning, right? Distribution of wealth. This evening, we want to take a closer look now at the payslip. And I want to say this. Understanding your payslip is not just you getting it and looking at the net pay. You must also understand what are your tax deductible, tax deferred deductions, with Magdalena Cooper will touch on. What is your national insurance scheme supposed to be, right? Are you putting any money into an approved retirement scheme or an approved superannuation fund? And if you are, how will that affect your net pay? Okay? A lot of us are not very au fait with that. So let's say we're going to put 10% of 100,000 into our approved retirement scheme. You will also notice that your national insurance scheme is already calculated. All right? So you will know if that figure is correct when you get your payslip, because sometimes there can be errors. All right? So let's say we put $10,000 into your approved retirement scheme. That creates a chargeable income of $87,000. All right? Now, it's going to be less any income tax at a rate of 25% for any income over the threshold of 1.5. Now, you'll realize that 1.5 is $125,000 per month. Well, you only made $100,000. So you did not pay any income tax here. Well, guess what? If we actually did 200,000, it would have calculated your income tax rate. So you're going to get a chargeable income. You're then going to take away all your deductions. It leaves you with $60,000. That is what you're going to pay 25% of, $18,000. All right. You're also going to have less other deductions, such as National Housing Trust, which is a tax-free savings, and Magda will touch on that as well. Education taxes, which you can see calculated there. Your life insurance premiums, which are also tax-free savings. All right, let's put $5,000 in that, because I know you know that insurance is very important. I always want to tell each and every client I speak with that, you know what? Insurance was really created for the rich, by the rich, to stay rich. All right? You think about that. And then you have credit union savings, and you have miscellaneous. And now you'll see where you have your net pay. All right? So the budget guide will break down from your gross pay all the way down to your net pay. And you can, again, go ahead and add different things here. Maybe if you have your credit union savings of $1,000, you can add that. That takes away $153,000. Okay. Now with that net pay, you can go over to your budget guide and start to allocate. But again, this type of information would have already been calculated over on the budget guide. We have a few rates over here as well because, you know, a lot of people don't seem to know where their taxes are going and what they're paying taxes for. So we put a little definition over here so that each and every person can just go through and read what NIS, NHT, what the ed tax, what income tax, and what the heart fund contribution really are and what it is that they do. All right. And with that being said, I hope each and every person on the call understand this. We will be sending this budget guide out with the Payslip designed and notation so that you can utilize it. And we hope that it will be of value to you as well. Magdalena Cooper, I turn it over to you.
Thank you, Mark. Thank you, Mark. And I really hope that everybody, are you hearing me? Am I on? Is everybody hearing me?
Hearing you loud and clear.
Okay. So as Mark said, the difference between what Mark said and what happens in Jamaica on most payslips, I don't know what happens in the other territories or countries, is that when you go into your payslip, you'll see pension stated there as opposed to superannuation fund and retirement schemes. Am I correct or am I wrong? Or am I incorrect? Okay.
You're correct.
Yes, right? So when you go on your payslip, when you see pension, you must be able to determine and write on the payslip it's a superannuation fund or retirement scheme or whatever is the name of the plan in the company that you're working at. Why are these deductions important? As Mark said before, they help to reduce the amount of taxable income, which is really what the chargeable income is. It helps to reduce it and therefore gives you more savings for yourself when you get older, and also that those savings help you to build wealth. Wealth is really about, this is my definition now, how are you able to accumulate capital which will sustain you and the next generation? The very wealthy do that, but they also train their children and descendants how to manage that. So once they've passed on, then they can take it on, but take the principles, but take it to another level. So that's really what we look at. So it's very important that you go back to your payslip and determine what it is, whether it's a superannuation fund or retirement scheme. The next thing I wanted to bring up on this particular sheet is the NIS, and I'm going back up there. NIS, based on the legislation, I don't know if I showed you guys this before. Whenever I go to make a presentation, there are two sets of books I take with me. I don't know if you all can see it. I take the laws of Jamaica and I take the Bible. You will find that the Bible provides a lot of principles for what's in the laws of Jamaica. And if you understand that once you are in a system, you have to have rules. And that's why when we start these presentations, we talk about the rules. Because if you don't know the rules, you don't follow them, you pay the price later on. So you can decide what you want to do. Do you want to pay the price or do you want to follow rules and get the best out of it? So going back to NIS, NIS up to the end of April used to be 2.5% in Jamaica. Do you know what it is now? It's 3% effective this month. Am I correct, Mark? It's 3% effective this month or effective last month?
Effective this month, you're correct.
Effective this month. So you might be saying, so how much, so much more is coming out of my pay? It's because you'd have had to go back and to the law. The law had changed. It was amended. I shouldn't say changed. It was amended. So it's now 3% instead of 2.5. Going down to NHT. So let me go back up a little bit to the top here. So these three plans up here, NIS, superannuation funds, and retirement schemes, are redesigned to accumulate capital, a lump sum, which will give you a guaranteed lifetime income. That's really what it's all about. And we're going to talk about that next week. If you go down the bottom, you will see NHT, which is a tax-free savings. What it is saying is that when you make a contribution to NHT, you make the contribution with after-tax dollars. What it means is that the tax comes out first where applicable, and then you make the contribution, because when you get the benefit doesn't attract any tax. And as I shared with Mark and Dave, when we were preparing, I had a friend of mine in the industry who said to me, I made the similar presentation years ago. And he said, you know, Mark, they chat plenty and this and that. And you know what I talk about? By the way, I'm speaking Jamaican for those of you who don't understand. And he said, I said, okay, well, let's see. Would you believe that about 3 years ago when he retired, because we're about the same age, at age 65, he got $5 million tax-free lump sum from NHT. Does anybody know anybody else who got $5 million tax-free from NHT? But if you know that, you just post it in the comments. So what has happened is I was able to help him to understand the rules. So one of the rules in order for him to get that, and you can make a personal decision in Jamaica for the Jamaicans on, and that is, do you take a 7-year refunds? Because remember that NHT allows you to take the 7-year refunds. You can decide to take it or not take it, or let it accumulate for a time when you're going to need it most. Like now, if you really had if you had a need, but if you don't have a need for the NHT sum, then leave it there, let it accumulate, and then at age 65, you go in and you collect your NHT old age special contributions refund. And then coming down again, as Mark rightly said, to life insurance is the same thing. And all these details are really based on Jamaican law. If Jamaican law wasn't there, you couldn't access that benefit. If you have any questions, please post them. Why isn't my screen not moving to the next screen? I don't know why. It's just not move. Oh, okay, it's moving now. Okay. So I went back instead of forward. So what is the first word in the word wealth? I think we said that at the beginning. Anybody wants to answer? Unmute and answer. Nobody?
We.
Very good. Very good. It's we. So that has been the problem in the Caribbean. We have not understood the principle of we for building wealth. Personal, family, own. And that payslip is your guide to building wealth, because you have an employment relationship. And therefore you have to understand how it works. Therefore be able to understand that payslip is your. What's the definition of pay? Anybody? Definition of pay. What's the definition of pay? Not those who know, but those who don't know. Let me help you in the interest of time. Definition of pay is cash and non-cash payments from employment, self-employed or business relationship. A lot of the self-employed and business persons don't tend to take out these payments in terms of NIS and NHT and so on. If you look at your pay slip, the pay slip doesn't say how much the employer contributes on your behalf for NIS and NHT. All it speaks about is how much you contribute. So it's that relationship that builds the portfolio and gives the money. The only thing I would say to you, people who are in business, and you all can check it out. I mean, say, you know, I can miss information sometime. And that is, years ago when NHT first came out, employers used to be allowed to get a 7-year refund. The legislation was amended and employers no longer get back a 7-year refund. But it doesn't mean to say that as an employer you should make a contribution, because the benefits that are being given now from NHT are really good, in that more people can get a home, the interest rates are really good, so it has its benefits. So whether you are working for an employer, remember that's cash and non-cash. When you go to the office and you, sorry for laughing there, to be laughing there. When you go to the office, remember when you're in the office, you get your light bill is low at home. Now that COVID-19 is on, I don't know how many of you have looked at your light bill, but I am certainly seeing my light bill up because I'm home more than before. So those are some of the non-cash payments that we get, and we have to recognize that it's a relationship, so both sides benefit and both sides have to deal with issues. What's the maximum number of contributor years required in order to qualify for maximum benefits from the following Jamaican retirement savings plans? And in every country, you need to know and see what the rules are. NIS and NHT. Anybody wants to tell me what's the maximum number of years? Anybody? No? 40 years. How long did it take the children of Israel to move from Egypt to Canaan? 40,
Really?
40 years ago, they were obedient. And a lot of us don't pay attention to these plans. I've spoken to a lot of people about NIS. They said, I can't bother with that. I said, well, can you please claim it? I'll go and claim it for you, and I'll keep the money myself. Oh, no. I'll go and claim for it. But the benefits are there. And the thing with NIS is not so much NIHT. If you don't claim the benefits on time in the event of disability, old age, and death, you start to lose benefits. So, for instance, when you get to age 65, as a woman born as a baby boomer, you need to claim your benefits by age 68, because if you don't claim it by age 68, by the time you get to your 69th birthday, NIS will only go 3 years back. You can go check it out yourself. If somebody dies and you're claiming the NIS funeral grant, if you don't claim it within 1 year, that's it. Sorry, nothing is there for you. So all these benefits have rules in them, and you've got to be familiar with the rules. You've got to write it down. You've got to understand what it is so that you can get the benefit out of these plans. Superannuation funds and retirement schemes, sorry about that, it's not showing, it is 37.5 years. You have to be contributing to these plans for 37.5 years to get maximum. Let's say it's 40 years. So you've got to understand how these plans work. I know I lost a lot of benefit because I didn't understand the we when I was married. And therefore, money was never spoken in my marriages. And so therefore, I didn't understand it. It's years later, I am now understanding what it's all about and how it impacts on your wealth as you get older. Anybody has a comment up, whether it's Sandra or Nicole, you can tell me, please. Lynette, no comments because I see something flashing on my screen.
Yes, Amoy, I think Amoy had a question. Amoy, you want to just ask that question?
Amoy, unmute.
Yeah, hi. I wanted to know the name of the fund from the NHT that you can apply for in old age or after retirement.
Okay, it's the same fund. You just go into NHT and say, good morning or good afternoon. I am here to claim my old age special contributions refund. A lot of people never do it. But they don't understand it because they think that the fund is based on a 7-year refund. No. The fund provides for you both 7-year refund and also an old age special contributions refund. And it's most unlikely that you would have all of your benefits by old age. Now, another thing that a lot of people don't understand and don't know is that if you get a mortgage with NHT, you can also ask them or make a request that you don't want your 7-year refunds to go to your mortgage. But if you have a problem paying it, you can go and take it out and pay it towards the mortgage. And you find that if you don't understand the rules, then you can end up not getting as much as you could when you get to age 65, which is when the old age special contributions refund come into effect. Any other question?
Keisha Shirley had a question. Keisha, you want to just unmute and ask a question?
Please.
Keisha Shirley.
I want the title of the book that Mrs. Magdalena is referencing. And I think it said something about the laws of Jamaica or something like that. I'm not sure.
Okay, let me tell you what, and you're correct. This is which is bound, this is bound copy. You can actually go down to printing office and get them like that. Or you can go to www.moj.gov.jm and you can download the laws and bind them yourself. I use to go to the printing office and get the binder, but it really documents the much better. And if you have something like this in your home as well, you'll find you can leave it open for your children and other people to read. Now, let me just go back to NHT for 1 second. I don't know how many of you saw the Sunday. I didn't bring it up before, so let me bring it up now. I don't know how many of you know that when you migrate from Jamaica abroad, you can continue to make your NIS and NHT contributions while you're abroad. Is everybody aware of that? So like, for instance, you have a lot of these people lining up for MoneyGram, I think it is, right? And so instead of them lining up for MoneyGram and the persons abroad making contributions to NIS and NHT, so if those persons abroad predecease the ones who they send the money to, at least they'll have a benefit there to get from NIS and NHT. And they themselves can make a contribution for themselves. So I am very concerned about the money transfer, MoneyGram, in that it is being done for the people here, but I'm not sure if contributions are also being established at NIS and NHT for the persons here and for the persons who have migrated abroad from Jamaica. But I just want to read something else. In Sunday's Gleaner, there was an ad, and an NHT ad. I know what the NHT ad said. Let me just read it to you. For sale to NHT contributors, island-wide and overseas. You see my eyes opening out wide? Island-wide and overseas. So a lot of Jamaicans want to say they want to own a piece of the rock. They might have left before they could own something. If they're making NHT and NIS contributions, they want to get a piece of the rock, they can come back and get it. So I hope you found that information useful. Let me move on to the next slide. This generation so that we need to teach our children when they get to age 18, they must start to contribute NIS and NHT. And if they get an employment relationship which offers them a superannuation fund or retirement scheme, that's when they must start as well. So these contributions, as I said before, takes 40 years to accumulate the capital sum to achieve maximum personal wealth, because you're going to need wealth when you retire. Am I correct? You're going to need it. What's your definition of retirement? In the interest of time, I'm going to give you the answers to this question. Retirement occurs upon the happening of 3 life events: disability, old age, and death. Now, this is a paraphrasing of the Income Tax Act, Section 44. The Income Tax Act 1955, Section 44, I think it's 2B, I think it is. And what it goes through and explains a long wording, legal wording, on when retirement occurs. And really what it is saying is disability, old age, and death. A lot of us don't think of retirement like that. We think of retirement, oh, you know, when I stop working, or no, I am retired, but I'm still working. It has nothing to do with that. What it has to do with understanding when retirement occurs has a lot to do with when you must claim your benefits. So even if you continue working, claim your benefits. That's really what it's all about. And when you go back into different legislation that impact on your benefits and on your payslip, then you'll know when to claim it. Your payslip provides info about your retirement savings and benefits for your disability, old age, and death. Sorry, the bottom part of the screen is not showing. So what are the fundamental financial issues as I try to wrap up here? Financial issues which are stated on your payslip. And again, I'm apologizing for the fine writing here. I'm sorry that it is so fine, but bear with me. I just want to put it on one page. And the fundamental financial information here in your payslip is gross paid remuneration, less tax deductible and tax deferred savings, NIS, ASF, superannuation funds and retirement schemes. And these are usually referred to in the accounting industry as above the line, which means that they come out before the threshold is applied to your pay. Then you have less income tax threshold, and then you have less income tax, if any, and then you have below the, which they call below the line or below the income tax threshold deductions. That's when you have your NHT, your education tax, your life insurance, your group health insurance. I want to bring this up as well in terms of a benefit. What I have found as well is that a lot of people are in, I beg your pardon, in group health and group life plans. And they seem to be unaware or oblivious that when you terminate employment, these plans usually have in them a conversion clause which says you can convert it into an individual plan with no medical evidence. So you can actually, if you had 5 or 10 million at the workplace and you can only afford 1 million, just convert 1 million. You don't have to convert the 5 million if you can't afford it. So you need to pay attention to this, because this also has non-cash, because you usually find that when an employer sets up a group health insurance payments plan, he will pay, it will either be on a contributory or non-contributory basis. And you need to know that, because if you don't know that, you can terminate employment and don't get the benefits you're supposed to get. And then less other deductions. And because the payslip is a legal document, that's why you cannot throw it away. I beg you, don't throw it away. Because that's why, because it's a legal document, you cannot walk up to accounts department of your company and say, you know, take out $5,000 and send to Magda next week. No, you have to literally sign a document, because remember, in a legal environment, you have to have everything in writing, because if it goes to court and there's nothing in writing, sorry, for the employer. So that's where that is. Okay, so after all of those deductions, you end up with a net pay, and I'm sorry you can't see the bottom, but that's exactly what's being said there. So pay slips are about relationships. Any and all activities for building personal and generational wealth include an understanding of how an employment relationship works and what is your role and responsibilities in that relationship. So you have an employment relationship, you get a pay slip, I beg you. It's your responsibility to keep it. It's not the employer's. In fact, I have had people call me up and say, you know, Magda, I don't understand. In fact, a friend was speaking to me about it. You know, I don't know if my NIS and NHT deductions are being taken out of my pay. I said, that's fine. I said, all you do is go to the institution and you can find out from them. She gave in her number. And yes, there were many, many months missing. So it's not that you come back into the employer and say, so how come you don't pay my NIS? Employers have a lot of things to think about. So if the money isn't sent, you can say, you know, I went to NIS and NHT and the payments weren't sent. Can you tell me when? Because it's a relationship you're in. You're not in a quarrel relationship. You're in a relationship. Yes. So I'm just giving you some tips how you can deal with some of those issues. Remember,
before you
and my
move
cousin
on,
from
Magda,
Trinidad sent me this one. Yes.
I know you're not yet through with your presentation, and I want to ask permission from the participants if we can continue beyond 6:30. If you agree, maybe you could just put something in the chat to give us your, go ahead.
Or raise
your hand.
That's fine.
All right, thank you so much.
Thank you guys, I appreciate it.
Thank you for your feedback. All right, so I'm hoping that oh gosh, I didn't realize time had gone so fast. Remember, a ship is designed to take you places. And my cousin in Trinidad, Flavia Isaacs, I need to remember her married name. She sent me this and I modified it. Remember, a ship is designed to take you places. So if your friendship, partnership, companionship, or relationship, family, employment isn't taking you anywhere, pursue love principles before you abandon the ship. Keep in mind that 1 + 1 equals a relationship, and it's also equal to infinity, infinite wealth. And that wealth is in the form of knowledge, personal and generational wealth. I am not going to go through the pay slip here. I just have it up here on the side here to just remind me. But remember, we spoke about remuneration. If you go to the Income Tax Amendment Act 2008, it actually, Section 2, it actually tells you what is the definition of remuneration. In relation to an employed person means all salaries, wages, fees, commissions, and allowances paid to the person. So salary allowances don't and is not said on the pay slip. But if I were you, I would include it as one of the other items, because I think Mark had 2 or 3 lines for your pay. You need to put that on there as well. Yes, Mark, would you agree? He's not listening to me. Tax deducted and tax deferred, we already said that, pardon me?
No, I said I would agree.
You would agree, thank you. Tax deducted and tax deferred, we said in summary, we're going over the pay slip now in summary. Tax deducted and tax deferred deductions is above the line item. Income tax threshold and income tax deduction, tax-free deductions, allowable deductions. And then you have your employee benefits deductions, which we spoke about, which is a contributory plan, and then you end up with your net pay. Yeah? Okay, my screen is deciding that it doesn't want to move on. Oh yeah, net pay. And remember, your net pay can be minus. Try not to stay in a minus. It's a very hard way to go home. I remember when I was with my aunt in Trinidad, and we used to live in a place called 2nd Street, 118 2nd Street. And there was another road that came into 2nd Street called 6th Avenue. And anytime you saw, she was Tanty Feet, that's what we called her. That's what she was known as. Anytime you saw Tanty Feet coming around the corner, and you see the left foot going one way and the right foot going another way, you know there's a problem with pay. We didn't talk about it, but you knew there was a problem with pay. So please manage it well so that you can go and have a loving, happy home. Creating principles of payslip management, create a filing system for each payslip, P45 and P24 statement. These are sources and generation of financial wealth. Review your payslip periodically to ensure the deductions are correct. Know that deductions are subject to change based on the Income Tax Act. That's in Jamaica. Complete an annual income tax returns. Know your income tax threshold. I don't know how many of you are familiar, but from ages 55 to 60, sorry, that should be 55 plus to 64, the threshold is increased. It used to be 80,000, it's now gone down to 22,000. You can check the Income Tax Act about it. And so therefore, anybody who's on the 1.5, they will get 1.5 plus 22,000. If you're 55 and over, and let me restate that, and you are also getting a pension. So let's say, for instance, you're in a retirement scheme or your superannuation fund has wound up and you're getting an income, you need to tell your employer that you're getting this additional income from your annuity income from your superannuation fund retirement scheme, and therefore apply the additional tax threshold. When you're 64 and over, no, 65 and over, I beg your pardon, then you get an additional 22,000 on top of that. A lot of people don't do their annual tax returns because they think that they're going to lose something. They're not. I think Nicole, my accountant, is on the line, and she doesn't have to say anything, but she can tell you, I get to her very fast every year to make sure that my annual income tax returns are done, so that all of my income can be put into the declaration, and therefore have the right income tax paid. And I tell you, this year I got a tax return. That's why I'm smiling so much. All right, so. Next, I want to move on to the next slide, but it seems as though, yes. So time and money, check your payslip regularly and review it for its correctness, state benefits, ARS, ASF, education tax, income tax, reduction payments. I know we're repeating these things because I want to drive into your brain. I want to stick in there so that you will do something about it every month and go check these things. You don't have to do it every month, but periodically check it, yes? You know your net pay is your wealth, personal and generational. Know the law. Remember that your employer relationship is a legal one. Hence, there's need to be aware of the laws which govern the relationship. And I'm not going to go through that. As I said before, go to www.moj.gov.jm. And these are the various legislation. When you go onto YouTube, you'll see everything on there. So I'm not going to go through it again. The only thing I want to say here is the Trustees Act. What I've found is that a lot of people are not aware that superannuation fund retirement schemes and NIS is based on trust law. And so therefore, once you have it based on trust law, you have what is called trustees who must manage those funds prudently for the benefit of the plan members. That's what they're doing. And sometimes we don't recognize we can go back to this law, and in fact, in Jamaica, there's a very good case law of the Air Jamaica superannuation fund, I should say, where the fund was being wound up and the employer at the time wanted to take back all the surplus, and their trustee said, no, it belongs to us. And they went to Privy Council, and a lot of people out of that fund got a lot of surplus distributed to them. Why? Because when it went to Privy Council looked at it from the perspective of it's a trust. So a trustee cannot come in and say, or an employer cannot come, I want it all for myself. No, it has to be shared with the members because it's a contributory plan. It's for the benefit of the members. The Employment Termination and Redundancy Act is also a very good act to look at. And if you're in another jurisdiction, please find the equivalent. So Any payslip questions? Again, my apologies for going on so long, but I hope you found the presentation useful. Any questions?
No questions. I don't see anybody has asked a question or raised a hand.
Okay. So
I did see Keisha says that she has kept all her payslips since 2004. So Keisha, you are well on your way to accumulating your wealth, your personal wealth. Yes. And at some point you may have it to leave as an inheritance. So congratulations to you on that.
Oh, can I ask a question?
Yes. Yes.
Okay, I did post one, but I think I posted it to Magda, who I was speaking to before. Now, if you have contributed NIS for over 40 years, should you stop?
That's a very good question. The issue you have with NIS is that even if you contributed for more than 40 years, that's a very good question. I can't tell you not to continue contributing because I have had clients who have done over 40 years, and what has happened is they get a bigger lump sum at retirement. So I wouldn't, a tax-free lump sum, I would not discontinue the contributions there at all, because your lump sum gets bigger at that time. Because NIS also gives a lump sum and a monthly income.
Yes.
I would not discontinue. Yeah? All right, so in the interest of time, can I move on quickly? You're welcome, Mary. In the key points in this is keep all your pay slips. I'm not going to read everything. Know the law which governs your employment relationship. Your 2020 pay slips and receipts info must be entered into your budget guide so you can see how your spending is going. Over to you, Lynette. Thank you, everybody. Thanks for staying with us.
Okay, so Amor has a question. She says, oh, Sandra, can you read that question?
Do you only get a benefit from NIS if you have contributed or it's the same one, for 40 years and over, no?
Yes.
The same one that was just asked.
Okay.
Yes.
All right. Thank you so much, Magda. You have given us a mouthful and then some. But we know that this information was very important, and a lot of persons don't seem to realize it. And so we thank you for taking the time, and for also to our participants for giving us some extra time to go through this with you. We certainly hope that it's been beneficial. So of course, it's time for the homework. Get all your pay slips, organize them, whether in an electronic way or in a hard copy file organizer. And check to make sure that there are no errors. Now you know where to find information that governs it. Look to see if if the deductions have been coming out in the percentages that they ought to, okay? And keep it simple. As Magda says, if you take some time to go visit these institutions just to check if your deductions have been going through. You don't have to take it on a day when you are at work, but whenever you get your vacation leave or so, take some time and get your business sorted out. A lot of us leave these things up to. And I'd also like for you at some point, Magda, I have a question. How do you speak to self-employed persons to get this done?
Well, I would say to self-employed persons, make it a habit to go and make your contributions every month to the various institutions like NIS and NHD.
Yes.
If you do it, I can tell you running a business is not easy. And if you don't do it, you'll find that when you get to time T, in the event of disability, old age, and death, and you have nothing, it's a problem. So it's better you put aside a little bit every week, every month, than you put nothing. And there's a flat rate for helpers and gardeners, which I think is $200 a week now. Please just encourage your helper or gardener, whoever you know is in that kind of employment relationship, to go and pay it, or you pay it for them. Yeah.
All right. in doing that, we want you to keep your focus, because come next week, we'll be talking another interesting topic. And we've talked about the accumulation phase of your wealth today. So next week, we want to touch a little bit on the distribution phase in terms of annuities and the law which governs your generational wealth plan. And of course, how to communicate this plan to your family. I'm very interested to share this with you next week. So I look forward to seeing you in person on Zoom at 5:30 p.m. Again, just want to say thank you so much for your attendance. And of course, we look forward to seeing you again next week at 5:30 when we talk annuities, we talk about the law that governs how your generational wealth plan is done, and of course, how to communicate this to your children. You can drop any one of us a note, a message, and we will be sure to answer you. The questions that we did not get to answer this week, we will answer them next week. If you come a little bit early, like at about 5:15, we'll be able to answer them so you can at least see and hear, the responses from our able panelists. So thank you so much and for being here.